I briefly want to talk about what is a buy here, pay here auto financing and then traditional financing or dealership financing. I want to talk about that because a lot of customers go to buy here, pay here lots or what we call B lots because they think that they can't get finance for a vehicle or they're scared or they're going down a different path they've never been through and the dealerships scare them. They're afraid to make that jump or they think they're going to be turned down. And I want to explain the difference. I want you not to be afraid to go to a dealership to get financing. But what is a buy or pay here is exactly what it is. You go to a dealership and it's in-house financing where you can have a job. They don't pull your credit. Most of them don't pull your credit because they're basing everything on your job, which means that more than likely these buyers pay here lots, they don't report to the credit report. You do have some buy here, pay here lots, which we call a B lot. Some may report to your credit report, but they're not going to be reporting to all three credit bureaus. All three credit bureaus are TransUnion, Equifax, Experian. And dealerships, when we use our lenders, they report to all three credit reports. And buy here, pay here lots, more than likely, 90% of buy here, pay here lots, they have high-end, high mileage cars. High-end, high mileage cars. They look good, but the miles are over 90 to 100,000 miles on that particular vehicle. So when you go to buy your pay your lots, they have payment schedules that are not convenient for you, but they're convenient for that particular lot. Again, a buy your pay your lot is a B lot, a standalone where there's no service department, no body shop. You walk in, you make your payments. And the payment schedule usually on the buy your pay here is weekly, every 2 weeks, and never monthly. Because the buy your pay here owners, the financing gurus, right, at the buy your pay here, they want their money every week or every 2 weeks. So they do it convenient for them because they're lending money to you at their discretion, which means a lot of buy your pay your lots, their interest rates are over 25%. In Michigan, interest rates can't be over 25%, but in the other states, it may be 28, 38%. So it might not, the cap is not the same cap on the interest rate as it is in Michigan, as it is in Atlanta or Florida. So know that when you go to buy your pay here lot, they care about getting their money. Those interest rates are based on what they feel that you should pay, the cap that they can get the most return on their money. And then you may not even have a warranty. Or they may give you a 30-day warranty or 60-day warranty. They still expect you to keep paying, even though your car may break down. So buy your pay your lots. Remember this: you get higher interest rates. You get the older cars with higher mileage. They look good, they stand tall, but you gotta look at the mileage. And then you gotta look at too, are they reporting your credit report? Most of them don't report your credit report, but when they do report, they may only report to one credit report. If you're making your payment on your car loan, you want them to report to all three credit reports. But again, the purpose of this video is for you don't be afraid to go to a dealership and to get financing. If you're scared, if you are, right, call ahead. Call ahead and say, you know what, talk to someone in the BDC, which is a business development center, or a salesperson and say, you know what, do you guys do special financing? Do you help customers that have bruised credit or bad credit? Do you help people that are in bankruptcy or that bankruptcy discharge, Chapter 7 or Chapter 13? Do you help those individuals? Do you have banks? And they'll either be able to answer that question, boom, right then, or they start stuttering. If they start stuttering, just hang the phone up. Or be nice and say bye. But you want to have that dealership that's what they specialize in. So dealership financing, different dealerships pull different credit bureaus. We pull TransUnion, and then we send it to the bank, and the banks pulls whatever credit bureau they want to pull, right? But at dealerships, we have maybe 15 or 20 different banks that we deal with. And that is because it's the relationships. We have the conventional banks, the banks when you have that great credit score. And then we have the subprime, the special finance and banks that we deal with to help you get into a vehicle. So traditional dealerships or dealerships that have Chevy, the franchise dealerships, Chevy, Buick, GMC, Mercedes, Ford, Chrysler, Dodge. Those are franchise stores. They have the service department connected to them, or they might have the service department down the street, or they have a body shop. And of course, the banks that we deal with, they report to all credit reports. And the thing about dealerships, they may be around much longer than the buy here, pay here lots. The buy here, pay lots more than likely are worried about, am I going to be able to keep the lights on because you don't, if you don't make your payment. Most of the franchise dealers have deep pockets, or they have halfway pockets. Some of them got deep pockets, some got halfway pockets. When I say halfway pockets, they got one foot out the door and they got one foot in the door. So if you're looking for that franchise or that dealership, do your history. Find out how long they've been around. Find out whether it's a family-owned dealership. Find out whether they got an automotive group, or they have 2 or 3 different dealerships, under one umbrella. Or do they have 8 to 10 up under one umbrella?